Hey guys, welcome back. You're still tuned into Trading Hour. There is a little bit of an attempt to a move higher. The frontline index is absolutely flat, but the mid caps are doing slightly better, around 0.25% higher there. So it's a 60-point gain that you're seeing on the mid cap index. And the banks have also moved into the green. That is where we were seeing some pressure. So that index also has moved into the green right now, just around 40 points higher, but very, very quiet as far as the key indices are concerned. Let's talk about some individual companies now. Medicure is the one that we're tracking. The company posted quite a good set of Q3 numbers. The revenue growth came in at around 24% versus last year. In fact, the company's margin has also expanded in this quarter. So we have Himanshu Baid, Managing Director of the company, joining us now. Mr. Baid, thanks a lot for joining us. This is Pavitra. If you can just begin by talking us through the revenue growth. It's been quite good at around 24%. I think for 9 months, you're clocking around 800 crores. Can you tell us for this quarter, what is the split between revenue from exports and the domestic market, and what is the kind of growth that you've seen in these segments?
So thank you very much. I think we are seeing a good growth in the export segment, especially from Europe, and that's growing around close to 25% year on year. And when we look at the domestic market, this year the growth is slightly muted to around 15%, because last year the growth was mainly on account of COVID products. So if we remove the COVID products, which were like oxygen products, kind of masks, and ventilator circuits and all, which we are doing, so that if we remove that part, then probably the growth is around 25% also in that segment, because the COVID product sale is not there anymore. But overall, we see a growth of around 21%, over 21% in 9 months. So, and we'll see this growth in coming quarter also, similar growth. And for next year also, we have given a guidance of over 20% from the current scenario we see right now.
Okay, so FY23 you should end with about a 21% revenue growth, and FY24 will be about a 20% revenue growth. You've also guided for improvement in margins next year by 100 to 200 basis points. Can you tell us what will drive this margin improvement? And will there be any margin improvement in FY23?
See, I think FY23 continues to, if you see Q3 results, there have been improvement in margin already. And I think as we move on to the next quarters, margin will keep on improving, because the raw material prices have come down a lot, because most of our raw materials were imported, they were coming and it's more petrochemical based. So prices have dropped from the peak, I would say, which were in, let's say, May, June last year. And now the prices have almost dropped by 30-40%. And similarly, the freight costs have also come down, drastically. It's almost half of what it was maybe a year ago. So all that will help us in improvement of the margin, and also maybe currency will slightly play a better role, because we have 70% export revenue. So overall, we see at least 100 to 200 basis improvement, going forward in the next couple of quarters.
Mr. Baid, some more color on products. I mean, as you mentioned that last year it was, for obvious reasons, it was all about ventilators, masks, and, oximeters for obvious reasons. What are the key revenue driving products for you now? And maybe a word on the US market as well. I believe you're looking to make further inroads in that big market.
Correct. So I think, see, we are only in consumable business, basically. So all consumables used in hospitals for oxygen therapy, basically. So that was a lot of business happening last year, because there was a great demand for these products, India and outside India also. But when we see this year, that demand is kind of dropped out completely. And the growth is coming from our infusion therapy and renal segment right now. So both the segments are doing very well. And when we look at US business, we are still waiting for US FDA approval. The final filings will happen in next maybe a week to 10 days. And after that, we are expecting the revenues to start from Q2. We still have a business in US, which is over $1 million today. But I think once we get our FDA approvals for some new category of products, we'll see a huge ramp up. And I think with China Plus One happening right now, a lot of companies are looking at manufacturing products in India. I think that's an area we are exploring right now.
So just a follow-up question. You mentioned you're looking for these FDA approvals. Are they in the same categories you mentioned, the renal segment, the infusion segment, which is driving growth for you right now? And once... Yes.
It will be in the infusion segment.
Infusion segment. So once these approvals come in, can you typically command higher prices for these products in the US market? I'm just trying to understand if net there'll be a positive impact on margins, or whether this will be more of volumes increase that will play out. Q2 onwards.
So I think US is anyways a high margin market. So we will see a better margin coming out of these products from the US market. That's pretty sure. So I think our margin, Europe and US will almost remain in the same zone. So when you compare with Asia or Africa, the margins are lower, but in Europe and US, the margin will be at a similar level. So I think that will help us to improve margins as the volumes grow. And also, when we look at, and most of these products are patented devices, so we will have a better, let's say, profitability in these kind of products.
Okay, Mr. Baid, you said that you do expect these approvals to come through from the US. How much do you think the US will be contributing going forward, and what is the level right now in terms of contribution? Yeah.
The current level is just over $1 million right now, but I think once we look at these products getting approved, so I think in 3 to 4 year window, we would see revenues going to around 10 to let's say $15 million. That's the rough estimate I see right now. It can be more also, but it depends on how things are going to shape up after this China plus one strategy. What is a lot of US companies are driving right now.
I believe there's some dumping of products taking place by China in the renal business. Could you elaborate a bit more? What exactly has happened and how do you see this play out?
See, there are two things right now. I think most of these Chinese companies are, misusing the FTAs, and they are setting up pseudo manufacturing facilities in Thailand or Malaysia, and from there they are dumping products into India, and they get a duty waiver because from those neighboring countries we don't have any custom duty on imported products. Secondly, I think what we see is most of these companies are selling products below the import price in India. So if you look at the import price and the price they are selling in India is much lower. So the clear strategy is to eliminate Indian manufacturing. And I think that is where we are struggling. And also there's a very low GST on these products. So whereas when we make in India, we pay around 18% GST on all the, let's say manufacturing, let's say raw materials, whereas on the finished product, GST is only 5%. So when the Chinese bring the product into India, they pay only 5% ISGST. And whereas we pay almost 18% on our imports and 5% on our outputs. So we have a lot of inverted duty structure on the product.
So have you lost market share on the back of this? Have you lost market share?
See, we have not lost market share. I would say the growth we were anticipating was around 60 to 70% in this business. We'll be probably getting only 40, 45% or 50% in that range in this current financial year. So that is kind of hampered the growth a little bit. And the product is also part of the PLI scheme. So we have been going back to the government and telling them that they will have to do something on this FTAs and also this inverted duty structure. Otherwise, the Chinese will keep on dumping the products in the market.
And as things stand, in your FY24 guidance of 20%, what is the growth that you're anticipating from renal business? Are you expecting this dumping to continue, which will keep your growth suppressed?
See, overall, the company will grow over 20%, so there is no doubt about that. So we have factored it in our, future guidance. But I think dialysis business, which we were hoping to grow to, let's say, around would 50 to 55% next year, maybe grow around 35 to 40%.
Okay. We'll leave it at that. Thank you very much for joining in. That's the word from Medicure. Today, the stock is down 3%. Get into a break. On the other side, we'll discuss market technicals. Mitesh Thakkar of earningswave.com will join in.
Want dividend